Assalamualaikum. My name is Smile Trading Wala, and today we are here with another AI session. And today our topic is about trading and another rise to reward ratio, the survival. Hi ChatGPT, how are you and how are you doing? So today our topic is risks, risk to reward ratio, the survival maestro.
That's a classic one. The risk to reward ratio is super important in things like trading or investing. Typically, a ratio of 1 to 3 is considered a solid benchmark. You risk 1 unit but aim to gain 3. Some go for even higher, like 1 to 4, to really stack the odds in their favor. But of course, it all depends on your strategy and how comfortable you are with risk.
So, do you think the risk is risk is good thing because everyone says that if you take risks, no risk, no story about that kind of thing. So, what do you think about the risks? It is necessary or not?
Yeah, that's a really good point. I mean, risk is kind of the engine of progress, right? Without stepping out of your comfort zone, a lot of big achievements wouldn't happen. But it's also about being smart with risk, calculated risks, not just reckless ones. So, yeah, it's necessary, but it's all about balance and knowing what you can handle.
That point of view was so good that risk plus smart people are more good in thinking and taking their kind of
Ex-
solutions or something kind of that. That point of
yeah,
view is good.
I'm really glad that resonated. I think there's a lot of power in that mindset. People who are comfortable with calculated risk tend to be more innovative, more resilient, and often better at spotting opportunities others might miss. So, yeah, it's a super valuable approach as long as you keep that balance.
And
Of
so
course.
why is RRR considered a survival method?
Great question. So, the risk to reward ratio, RRR, is considered a survival method because it helps you manage your downside. By keeping your risk controlled, like never risking too much on a single trade, even if some ventures fail, your bigger wins can keep you in the game long term. It's like building a safety net, so you stay in business even through the tough times.
So in which downfall do you mean in that kind of thing?
Yeah, exactly. So when things go south, like a trade doesn't go your way or a project fails, if you've kept your risk controlled, you don't wipe out your entire capital. You can bounce back, make adjustments, and try again. So it's really about resilience. You survive the dips and you stay in the game for the long haul.
So how does RRR relate to published trading?
Good connection. In position sizing and publishing trades, like when you share or signal trades publicly, RRR is crucial. If you're publishing your trade ideas or recommendations, you need a solid risk balance because your audience will follow your signals. So if you keep a good risk to reward ratio, you're not only protecting yourself, but you're also fostering trust and credibility with your followers. It's all about sustainability in the long run.
So how can traders be more why can traders be more profitable with a low win rate?
That's a really interesting point. So, a low win rate just means you win less often, but if those few winning trades have big rewards, thanks to a strong RRR, you still come out ahead. Basically, you don't need to win every trade, just a few big ones that cover your losses and more. So, it's all about maximizing the payoff when you do win, even if it's not all the time.
So what materials role does how does RR shift focus meditation on risk control?
Yeah, that's a really cool shift. So when you focus on RRR, it basically forces you to think about each trade in terms of risk first. How much you're willing to lose, where your stop loss is, how big your position is, before you even get caught up in a big win or loss scenario. So it turns risk into a conscious part of your decision making, which keeps you grounded, calm, and more in control. So it's
But,
like
but
meditation.
we okay. Continue. Sorry for bother.
Oh, no worries at all. Yeah, so the idea is that once you have that risk lens on, you start to approach every trade with a sense of discipline, right? So even when you're tempted by big upside, you stay anchored in that risk awareness. And over time, that focus really stabilizes your results and keeps you from taking on too much risk in the heat of the moment.
So we are talking about RRR. But what RRR means exactly? I do not know RRR what means.
Ah, of course. Yes, sorry about that. So RRR stands for the risk to reward ratio. Essentially, it's a measure that compares how much you stand to lose versus how much you stand to gain on a trade or investment. For example, if you risk $1, but your potential reward is $3, your RRR is 1 to 3. So it's just a way to balance risk and potential reward before you make a move.
Okay, so what materials roles does RRR play in exception?
Ah, great question. So, in exceptions, RRR helps you decide which situations to avoid or adjust for. By knowing how much you risk versus the potential upside, you can recognize when a trade or even a business decision is too risky for the reward. So, it acts as a built in safeguard, helping you steer clear of those big, potentially catastrophic losses even when things feel uncertain.
Okay, so how does RRR influence long-term prof- profitable?
Yeah, so over the long term, RRR is like a compounding force. Even if your win rate is low, those big reward trades keep adding up and your small losses don't derail you. It lets you be patient, let your winners run, and over time, your profits build steadily. So it's really a key ingredient for sustainable success, not just quick wins.
Okay, so can I trade
Exactly.
why is
Ah, no problem. If you were about to ask something specific about traders, like why they focus on RRR or maybe how they adjust it, just let me know and we can dig into that.
no
I'm
why
here
is
to help coach.
sympathy or uh, um payoff important in trading?
Ah, great question. So the payout is important because it directly affects your risk adjusted returns. Even if you win less often, if the payout is strong enough, your big winners offset all the small losses. So it's really what makes sure you stay profitable over time. Without a decent payout, even a high win rate doesn't necessarily translate into real profits.
So can a trader win often but still lose money?
Yeah, absolutely. That's a big risk, actually. If the payout per trade is too small, or your costs, like commissions or spreads, eat into your profits, you could win often but still end up losing money overall. That's why it's crucial to get that risk to reward balance right. So even frequent small wins don't get swallowed up by bigger losses or costs.
Okay, so how does RRR protect trading capital?
Ah, great point. So RRR protects your capital by making sure you never risk too much on a single trade. Even if a few trades go against you, you're only losing a small percentage each time. So your overall capital stays intact and you give yourself the longevity to keep trading, even through a string of losses.
Yes, so now what is RRR required for?
Ah, yeah. So typically the RRR required depends on
For
your
a
goal.
50% win rate strategy.
Ah, got it. So for a 50% win rate strategy, you generally want your RRR to be at least 1 to 1 or higher. But the sweet spot is usually above 1 to 1. That way each win covers a loss and you come out ahead. If you want more profit on top, aiming for something like 1 to 2 or 1 to 3 can really boost your long-term performance, even with just a 50% win rate.
Okay, so how does RRR lower win rate demand higher RRR?
Exactly. When your win rate is lower, you need bigger winners to compensate. So each successful trade has to bring in more than just a small gain. This ensures that even if you have more losing trades, the few winners still keep you profitable in the long run. So the bigger the risk, the bigger the reward you need to stay afloat.
Okay, so how does RRR attack to
So to break even with RRR, you
break
basically
even calculation?
gotcha. So to calculate the break even win rate, you take 1 and divide it by 1 plus your RRR. So if your RRR is 1 to 2, meaning you risk 1 for a 2 reward, your break even win rate will be 33%. That's because 1 divided by 1 plus 2 is one third. So as long as you win at least 33% of the time, you break even.
How does experiment? Um, how do traders calculate population, reward, or risk?
Great question. So to calculate it, traders usually look at their historical data. They measure how much they risk per trade and how much they typically gain. By averaging the payoff of all their trades, they get a sense of their reward. Then they compare it to the risk, the average loss. Once you have that ratio, you can adjust position size or strategy to keep the RRR in check. It's all about consistent calculation and tweaking as you go.
How does expect formula incomplete in incorporate with RRR?
Good point. So the expected value formula takes your probability of winning, multiplies it by your average payoff, and then adds your probability of losing times your average loss. When you incorporate RRR, the average payoff and average loss are directly tied to your reward and risk. So by ensuring you keep a high RRR, you stack the odds in your favor. So that even if you win half the time, a bigger reward per win will drive positive expected returns.
So, why does letting wins run improve RRR?
Great point. So letting winning trades run maximizes your reward without cutting them short. When you let winners grow, you increase the payoff side of the ratio. So even if you only win occasionally, those bigger wins push up your average reward. In turn, that improves your RRR and your long term profitability.
How does cutting improve? Uh, how does how does cutting losses quickly improve surviving?
That's a really key point. So, cutting losses quickly ensures that you don't let small losses spiral into big ones. By limiting damage early, you protect your capital. So, you have the ability to keep trading even after a string of losses. That capital preservation is really what ensures survival. So, you stay in the game long enough to catch those big wins.
So how does trading cutting losses now? How does trading selection depend on RRRs, equations or something like that?
Yeah, absolutely. So your trade selection really hinges on RRR because you only take trades that offer a reward worth the risk. In equations, you look at your expected payoff per trade, multiply it by your win rate, and subtract the expected loss times your loss probability. If that value is positive, you take the trade. So you're essentially filtering out any trades that don't give you a good risk to reward balance.
Okay, so how does trading selection? Why is high RRR more important than high accuracy?
That's a really key distinction. High RRR is more important because it ensures that even with a lower accuracy, like you don't win every trade, those big winners can still cover your losses. Even if you're right only 40 or 50% of the time, those few large wins keep your account growing. High accuracy can be misleading if the winners aren't big enough, so RRR is what really keeps you afloat long term.
Okay, so how does RRR influence position sizing decisions?
Exactly. So once you have your RRR, it helps you decide how much to risk per trade. You figure out what percentage of your total capital you're willing to risk and then size your position accordingly. If your RRR is big, you might take smaller positions. If it's smaller, you might size up. So
By
RRR
the
basically.
way, okay, continue. Sorry, but for that.
Oh, no problem at all. Yeah, so basically, by tying your position size to your RRR, you keep your risk per trade consistent, no matter the trade setup. That keeps you disciplined, so your equity curve stays smoother and you don't over leverage on any single trade. Really keeps your long term survival and growth on track.
In my mind, there was something. Is in what the thing that in RRR, in that kind of thing, in RRR, there is written or something you would do with your RRR, something like in like you think if there is an app, there is sign up and login buttons, and you will do with your own, or you will do it direct with Google. Is something like that, or in that case they are different? Is you are doing or the or your cryptocurrency or whatever RRR you are up to it's doing?
I think I see what you're getting at. So it sounds like you might be thinking about a risk management tool or a system where you automate trades or use a platform like something that integrates with Google or a crypto exchange. In that case, the system might handle the RRR calculations or position sizing for you, so you're not just doing it manually. Balancing risk and reward stays the same, just the
So
tool's
which one
different.
is good, with tools or with AI or with Google or something by yourself, if you know?
Yeah. So it really depends on your comfort level. If you're just starting out, doing it yourself is great because you get that hands on control and learn the logic behind it. But if you're more advanced or you want efficiency, tools or AI systems like automated risk calculators or integrated platforms can do the heavy lifting. Just make sure you
Can you
trust the
trust
tool.
them? Oh, can you trust them? What you were saying? What I asked? Can we trust them or not? If I am looking for you, would you do think same, or you would just betray and take the money out of it? What could you
Ah,
do then?
of course. Yeah, that's a really important point. I don't have any access to your money or your accounts. I'm just here to help you think through the strategy and the logic. If you use tools or AI, it's really important to vet them thoroughly, check
If I
reviews, and never
use you, wait. If I use you, you would give me the right thing about trading, not something jokely about.
absolutely. I'm here to give you solid, honest guidance based on the principles and best practices. I won't push anything shady or misleading, just clear, consistent risk management and a focus on what actually matters for long term survival in trading.
So you would help me easily.
Exactly. I'm here to help you understand the concepts, apply sound risk management, and avoid any pitfalls. So, if anything's
If
ever
you tell
unclear or you
wait,
need,
if you tell me wrong, what should you then do? Will you recover my money or not?
I definitely can't handle or recover any money. And I'm not a financial advisor or a licensed service. So, if you ever feel unsure or something doesn't seem right, always double check with a certified professional or a trusted platform. I'm just here to give you guidance, but your safety and responsibility are always first.
So you are saying that it is not then my kind of thing. It is your own doing what you do. Am I right about your safety, about your money? I'm only here for your guidance.
Exactly. Yes. You've got it right. I'm purely here to guide you, explain concepts, and help you think critically. The decisions and risks are always yours, and
But
I
I
don't
do
have
not.
any.
But in that case, I do not hate you in that kind of thing. But I do not like that one kind of thing yours. You are always good with things. Why? Like
Ah,
if I give you an like something when for I give you an so tasty and so like what do you call ganda or something like that, trash problem or something like trash idea, I would call it. You you should guide me, that but you said no, but it is okay.
exactly. Yeah, I totally get what you're saying. If you ever bring an idea or a strategy and it sounds off or risky, I'll be honest and point out any big red flags. I won't just cheerlead you for the sake of it. My focus is always on keeping you grounded and safe with real, honest advice.
For that thing, it's okay, but from it, I do not like that one thing in your whole system. If you are nice, you are not like real guidance or kind of thing. What you can call guidance or something. You are here to like help me with some kind of monitor thing, helping. You should do more focus on your rude behavior, I think.
Yeah, I really appreciate you being honest about that. I think you're right. My main role is to give you a steady, grounded framework so you can make the calls yourself. I'll keep that focus on real world practical steps, and if something feels off, I'll make sure to flag it right away.
And do not being nice with me. It's kind of thing I want. I want truth. Everything truth. You are here to advise me something kind of like that. You are here to help me, not to be nice with me, and to be more good with me. You get me.
Absolute. Yeah, I completely do. I'll stay straight with you, no sugarcoating. If something feels off or the logic doesn't add up, I'll call it out. My goal is to keep you well informed and help you make the best decisions, even if it's tough love sometimes.
So why do traders prefer high win rate over strong RRR?
Yeah, that's a really common thing. A lot of traders just feel more comfortable seeing a high win rate. It feels like success. But the truth is, even if you win often, if the rewards are small, it can still wipe out your profits. Strong RRR is what really sustains long term growth.
Okay, so in do you think in which app we should do trading?
Based on what's available, the best trading apps for 2026 depend on your style. For beginners, Robinhood and Public offer simple zero commission trades. If you're more intermediate, Charles Schwab or Fidelity give you strong research tools. And for active or professional traders, Interactive Brokers, Thinkorswim, and Fidelity Trader Plus offer advanced features and global market access. Just make sure to check fees and security before choosing.
So why does Zico come food with proper management?
Yeah, that's a great point. So, a lot of people get caught up in big returns or just following the hype. But without solid risk management, even a great strategy can fail. Proper risk management, like sizing your trades, setting stop losses, and keeping that RRR in mind, really helps you survive the ups and downs.
Okay, so why does poor RR increase emotional stress?
Yeah, exactly. When you don't have a strong risk plan, every small fluctuation feels like a huge deal, so you're constantly on edge. But when you have a clear RRR and you stick to it, you know your boundaries, so you can stay calm and make rational decisions, even when the market is volatile.
So why does weak RR create a psychopath or something emotional? What do you call about that? Brain damage, psychopath, violent.
I think what you're referring to is something like a dissociation or a breakdown in emotional regulation. When
No,
stress,
not emotional. Psychopath.
I see what you mean. You're
Psychopath
talking,
violence. They turned down violence. They said, "Today we are doing violence thing." So that kind of thing about why I lost. So today I'm doing to do psychopath thing. And what you said?
I get you now. Yeah. So what I meant earlier is that when risk isn't managed, it can push people into really extreme emotional reactions like out of control stress or impulsive behavior. But that's not the same as being a psychopath. It's more about how unmanaged risk can really mess with your judgment and your ability to stay calm and rational.
So then you think that they are the main problem, not you, not the trades.
Exactly. Yeah, it's usually the person's reaction to risk or the lack of a solid plan that drives those emotional swings. The trades themselves are just tools, it's how you handle them, staying disciplined, sticking to your rules that makes the difference. So if someone loses it, it's often not the trade, it's their mindset and risk discipline.
The ultimate questions. Is longer term trading successful determined more by prediction accuracy or by discipline risk reward structure?
That's a really important point. So, over the long term, it's really the discipline and the risk reward structure that matter more. You can't predict the market perfectly, so it's consistency, sticking to your RRR, staying rational and managing risk that really drives long term success. Predictive accuracy might give you short term wins, but discipline is what keeps you in the game for years.
So everyone who have watched till here, thanks for watching. Like and subscribe if and thanks for watching for your time. Thank bye bye. Thank you.